We are experiencing global consumer price inflation right now, not just this is a huge, huge problem.
Global crisis since World War II.
Yeah, absolutely. And their solution is to do what? UBI. Let's give people more money and let's restrict the supply of goods and services even further by making it harder for the producers to actually produce. So what they're doing, they're trying to sell this to the general public. The way we solve consumer price inflation is by creating more money and producing less stuff. It's the complete opposite. Yeah, we need less money and we need more stuff.
When you give people money, does it increase the debt?
It depends on how that money is generated. But
I understand, but somebody's got to pay the piper in there.
Yeah, usually it's going to be produced through the issuance of new debt. So if it's the government issuing new debt for that deficit spending, or if it's a bank issuing new consumer debt, then you got a loan to match up with that new money that was created. Yeah.
So is there any money in a credit card? It's debt, and that's how money is created.
Yeah.
You have to borrow it into existence.
Yeah, that's right.
That was 71. You have to borrow the money and money is created. That was a fractional reserve system. Fractional reserve system says you put your savings in a bank, let's say $100, the bank can lend out 1,000, 10-to-1 leverage in there.
Yeah, now they don't even need that.
No.
They can just create money out of nowhere. And that goes back to the central bank digital currency and them trying to ban cash.
And I think that's why so many young people are in crypto. They know something's wrong. They just don't have the big macro picture of it.
Mm-hmm.
And they get caught up in all these swings. So you were talking about CBDC, central bank digital currency. What does that mean to you, George?
Well, a central bank digital currency simply means that all the average Joes and Janes in society, including the businesses and corporations, now have an account with the central bank. In our case, it would be the Federal Reserve.
But isn't that Marxism, central banking?
It's absolutely 100% central planning, because what happens now is the banking system is in charge of creating most of the new money. Now, it's a little bit different with these deficits and quantitative easing and whatnot, but usually it's the banking system. So if they keep that loan on their balance, if the bank continues to own the loan, they want to lend to someone who's going to pay them back, right?
Really?
So hopefully they're going to lend it for productive purposes, meaning the majority of money that's being created is going to create more goods and services.
Right.
And that's why you don't have the inflation, even though the money supply increases. And that's why the free market works.
Right.